Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. Welcome back to the Commercial Property Podcast, and today we're talking about tenant retention, how you can keep your tenants and how you can make sure that they don't leave your property. So one of the real keys, we know that with commercial real estate, it's not about refurbishing to look beautiful. It's not about the bricks and mortar of the property. It's about the tenant, the rent and the lease. And so if you can keep tenants longer, if you can build relationships with tenants and, they're long-term partners in your commercial real estate, then that can only be good for business. It can be great for relationships, and it's also fantastic for capital values because, the more certainty there is, the more certainty there is of income. The longer the lease is, the better the rent is, then the better the capital valuation is. So it's a win-win all round. And I'm old enough to remember those days when landlord and tenant, it was landlord versus tenant. So the landlord held all the cards. There wasn't as much real estate about as there is today. The landlord would basically put in place a 20 to 25 year lease, 5 yearly upward only rent reviews, and there was a rent, and the tenant kind of had to like it or lump it. There was no partnership. It was very, very transactional. And, over the years, I've been in real estate 30 years. Over the years, I've seen that completely turn on its head. And that's primarily because of supply and demand. But primarily, let's face it, because it should be a partnership. They are long-term investors in your property as much as you are. And so kind of making this a purely transactional, actually a confrontational relationship really doesn't seem logical. And so if you want to keep tenants long term, there's some things you need to think about so that you make sure that you do so. So let's get stuck into it. So I think the first thing to say really is that if you want to make sure that your property is constantly tenanted, very limited voids, or that you keep tenants longer term, then it starts right at the beginning in stock selection. It comes down to exactly what you're buying. And if you're buying a property, this is where niching comes in. This is why I bang on about niching a lot, because if you can buy properties that tick the boxes for future trends in the economy, socioeconomic trends, or in locations that are really, really strong and don't look likely to be, depleted, then you can actually, you'll have supply and demand working in your favor, because at the end of the day, commercial property is really governed by supply and demand. And, if there's a big supply of units that are operator can take in whatever sector that it is, then they're not going to be really nice to you and be really soft in the negotiation. They're going to say to you, well, look, I could go to one of 6 units here. So what are you going to pay me? What rent free am I going to have? I want, regular annual break clauses, because the negotiation is more weighted in their favor. So it starts very much with the type of property you buy. If you can buy something that's future-proofed in a strong location where businesses trade well, and that's the most important thing, and that looks likely to continue. Now, we can't always kind of predict everything that's going to happen. This is why we review our portfolios all the time to make sure that, that we haven't got things on the horizon that may affect it. Now, obviously, sometimes things arise that we just can't foresee, like COVID came along and, the bottom fell out of the retail market, certainly whilst that was going on. But, the whole retail market did change during COVID. Same as the office market as well. But we can predict trends. So all that happened in COVID was that trends that were happening in retail just got fast tracked. So we knew they were coming. So if you're an investor, just ignored that. It was happening. But if you bought in an area with a small high street where there was loads of footfall, loads of demand, maybe all round tourist trade or all round reason why, conference traffic or airport or port or whatever, there's reasons for people to come to that location, then potentially you weren't that affected by COVID. So number one is the property that you are buying. Number two is the type of tenant you've got. Have you done your checks and balances on your particular tenant? Have you checked their covenant? So what I mean by that is, what's the likelihood of them still being around at the end of the lease? What will a valuer think when they see that tenant? Will they think, oh, flaky covenant, could be gone tomorrow? Or will they think, yeah, you know what, even either they're a brand and they've got a really strong balance sheet, or they're actually a good local operator. They've been operating for over 3 years, or they've been operating for 10 years or 20 years, or a family business, whatever it might be. They've got a proven track record, their accounts are good. So are you doing credit checks? Are you speaking to other landlords? Are you looking at their track record? Are you Googling them? Just do your checks and balances and make sure they're a decent tenant. And also relationship and rapport is really, really important. And you'll hear me coming back to that time and time again, because it's a partnership with your tenant. They are long-term partners in the future of your property. And let's face it, if they're a good tenant, the longer the partnership is, the better for you, because that is going to reap loads of rewards financially for you. So to bring the right tenant in the first place, somebody that isn't flaky, isn't going to fail within a couple of years, is super, super important, and something that is a responsibility for every commercial property owner to make sure that they do. So property tenant. Now, once you've got a tenant in place, then when you put a tenant in place, you might be looking at a rent deposit, or you might be looking at you might be looking at a personal guarantee or guarantors or whatever. So you want to put some checks and balances in place. But once you've got that tenant in place, like, don't just speak to your tenant whenever there's a confrontational relationship. So the classic is you don't speak to the tenant until there's a rent review or a lease renewal, or something's gone wrong at the property, or they stop paying their rent and then suddenly you start talking to them. That really isn't the way to behave. So you just need to kind of diarize regular check-ins. Maybe go and visit them once every 6 months, every year. It might feel like overkill. If you've got a big portfolio, you may want to get property managers to do this. But equally, somebody needs to be touching base with tenants. How's it going? How's trade? It's really important to find out how they're doing in a location, because that will give you an early warning system as to how well they're doing in that location. So, if you go and just have a chat, have a coffee when there's no rent review, no lease renewal, when they've not stopped paying the rent, and you're like, oh, how's trade? How's business? Now, sometimes they'll just blag it and say, oh, terrible, just, because you're a landlord and they don't want to kind of cough up any real information. But sometimes if you build a relationship, if you build rapport, they'll talk to you like a partnership. So and then you get an early warning system as to trade's terrible, trade's good. Take it slightly with a pinch of salt, make sure you can get it corroborated, but equally it'll be an early warning system that A, they're trading really well and they might want to stay, or B, there might be some risk in terms of their longevity in that location. So check in when you don't need to. Do not leave it to those points in a lease where you have to talk to a tenant, when you're sending legal letters, you're marking everything without prejudice and subject to contract and stuff, because actually it's too late to build rapport then. And, so it obviously is easier with some tenants than others. So national brands sometimes don't want to talk to you, especially, if they've got multiple units. But equally, you can still build relationships with the store managers. They can give you a lot of information about what's happening in that particular location. So definitely build relationships. The other thing is that if you've got a property with a service charge, then, make sure you manage it properly. That's probably your main interaction point with the tenant. So don't take the piss with an insurance policy that's too high, because you'll maybe getting a kickback from the insurer. don't charge too much for management. Don't throw in nice to haves that really are kind of starting to stretch the tenant to the limit financially. And just make sure that you are managing it properly. If there's maintenance items, and this isn't just for service charges, this is, if there's any responsibility for a tenant at all, for a landlord rather at all, is that you must just make sure that you do what you need to do. So, spot maintenance issues before they arise. If there's, if there are problems, don't leave it, 3 months to fix something. Get it done. Send somebody the next day, send somebody the same week and get it done. That will just build trust. Relationships are all about trust. They're all about rapport, cooperation. And, you can definitely help that along with your actions. So the other thing I think in terms of building tenant relationships is there any value add that you can give? So appreciating that this is a lot easier if you have kind of a multi-let space, but say you had a multi-let office, so you could just provide office suites and a kitchen and bathrooms and that's fine. Or you could provide networking events. You could maybe provide extra facilities. You might provide a really nice coffee machine. You might provide CPD workshops, so that they can, get their accreditation if they need to. You could maybe have relationships with key partners so they can get, reduced price insurance or, things that serve their business that, that at preferential prices. You might be able to get staff perks for them at reduced prices. So, there's things that there might be a gym in the office building. Things that maybe other properties don't have that just give you the edge, and means that you build that loyalty that they want to stay there longer term. And it just means that there's an element of trust there. And people enjoy being in that location. So appreciating that definitely works better for multi-let than it does for kind of single let units. But certainly if you've got a multi-let, consider how you get competitive advantage over similar units in that particular location, and think about how you can actually work it so that you're kind of the operator of choice.
This episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
Now, of course, that can also be down to money as well. So let's think about it. You are negotiating a lease at the beginning of a lease or a lease renewal. And obviously, as a landlord, it goes without saying, you want to maximize the rent, you want to maximize the lease term, you want to minimize any incentives. But what would you rather have? And this is really worth thinking about. If you had to have, an extra 50p a foot or an extra 5 years on the lease, what would you choose? And I think probably if you look at the numbers, and you certainly get a valuation done, depending on the valuation methodology used by your bank, I think you'll probably find that the longer lease is better. And actually, you'll make that money up over the lease term if you've got the right rent review provisions. So, think about this way up. Now, if you buy a really great property, you probably don't need to make that kind of offset. But, just be pragmatic sometimes. If you're really hard faced and, you take, that might come back and bite you. Now, it may not, but it may do. The other thing that I always say to clients is that if you are negotiating a deal and perhaps the tenant has a short-term lease in place, so you might be buying a property which has already got a tenant in place, but they're only in there for a couple of years, say. Just make sure that you've got some capital in your appraisal. So, whether that's 6 months equivalent rent or may even be 12 months, depending on the type of property. Now, it might be the tenant's liability to repair the property. But if you're going to them and, your strategy is that I'm going to buy a property with a short lease, I'm going to then extend the lease so that I can get a better value. And you're going to get, 100, 200,000 pounds, whatever it is, increase in capital value as a result of being able to do a lease renewal, maybe at a higher rent. Then would you offer them a little bit of money to oil the wheels? And, we're not talking bribery here. Don't worry, this is all totally legit. But would you offer them a little bit of money to oil the wheels? So, for example, you've noticed that they might need a new shop fit. And, how much would it, it needs a refresh in here. How much would it cost? Oh, it only costs £10,000. Is it worth putting £10,000 into the pot? Now, I wouldn't offer it straight away. Don't get me wrong. I'm not kind of giving money away here. But, it might be that, they don't have to do the lease renewal early. It might be there's a couple of years to go. They might give you an extra lease length, if you can say, well, look, I'll give you £10,000, but I need another 2 or 3 years on the lease. So, it's sometimes a little bit of capital can just oil the wheels to make negotiations a bit easier. So hopefully you won't have to use it, but I would hate for you to start a negotiation and not have that wriggle room to have some money. Because, if your asset management relies on the fact that you want to extend this lease, then do you have any incentive for the tenant to agree that early? It might be they're trading so well, they want security, especially if the lease is outside the act. They won't have any security of tenure. So it might be that they don't ever want to move, and therefore it's in their benefit to actually extend the lease. That's fine. Don't be offering any money in that circumstance. But if they've, protected, maybe a bit sitting on the fence, you just want to be able to dip into that pot. Don't offer the full amount straight out, but be able to dip into that pot and use it as a bit of an incentive to get that deal done. And then you might get a 0.5% or a percentage point yield compression, which will more than pay for the money that you've put into the pot. So just have a little think about this. So I think in summary, just think about tenant relationships as a partnership. And that partnership starts well before you've bought the property. It's in your niche choice. It's in your location choice. It's in your property choice. Then it's in your tenant choice. And then it's how you behave during that term. Behave properly, behave professionally, behave in a partnership manner. And you won't always get tenants that are there forever. Sometimes tenants need to upsize, downsize. But keep communicating with them outside of these pinch points in leases like rent reviews and lease renewals, when you're confrontational with tenants, and you'll find that everything goes much more swimmingly very often than if you are you're only touching base, or you're doing everything through agents, and you're not building rapport and relationships. Rapport and relationships with tenants can go a very long way. So good luck with your tenant relationships. I hope they go well. And I look forward to seeing you next time.